After seed series, the company needs additional capital. It decides to run a Series A round. Now, an institutional fund invested in the company. The investment amount is 2.5 million. Price per share is $1. The series has non-participating feature. The first breakpoint is 2.5 million. The second breakpoint is 3.250. The next breakpoint is $3,250,000. This number also includes seed preferred liquidation preference amount. At $3,250,000, common equity value is 0. Now, the common equity investor will benefit from any increase in the exit value. Next breakpoint will be $4,750,000. This point, common equity price per share is 0.5. This price level, seed preferred owners have incentive to convert their preferred shares into common equity. Seed preferred shareholders gave up on their liquidation preference, but they own 1.5 million common equity shares. The next breakpoint will be 7 million. At this point, they gave up on their liquidation preference, but they convert into common shares and own 2.5 million common equity. At the same time, call option owners have incentive to exercise their rights. Remember, they have to pay $1 strike price, but they convert their shares into 1 million common equity. After 7 million, all shareholders converted their shares into common equity and benefit from the value increase. Here, we assume the total equity value to be 7 million. Based on the share of each equity instrument, we calculate the value of Series A preferred shares to be 2.7 million, which is higher than the transaction amount, which was 2.5 million. In order to find the real equity value, we need to backsolve this number to come up with 2.5 million value for Series A preferred shares. We arrive at 6.2 million for total equity value. Let's move on to Series Preferred B round. VC fund to invested $6 million in the company at a $2 per share equity value. Series B shares have seniority over Series A and C preferred, and Series A have seniority over C preferred. Based on the seniority, in the event of liquidation, first Series B investors will get paid. So first breakpoint is $6 million. After Series B investors, Series A investors will get paid. And next breakpoint is 8.5 million. After Series A investors, seed preferred shareholders will get paid. Therefore, next breakpoint is 9,250,000. At this point, common equity value is 0. At this breakpoint, now common shareholders will benefit from any potential increase in the exit value. Next breakpoint is 10,750,000. At this point, Seed preferred shares have incentive to convert their shares into common equity. Of course, they gave up on their liquidation preference. Next break point is 13 million. At this point, common equity value is $1 per share. Here, Series A shareholders have incentive to convert their shares into common equity. Also, option holders have incentive to exercise their rights. Next breakpoint is 21 million. At this point, common equity value is $2 per share. Now, Series B shareholders have incentive to convert their shares into common equity. Of course, they have to give up on liquidation preference. Our initial value estimate for equity value was 33.3 million based on the implied value of Series B shareholders. If we plug in that number in our calculation, you will see that Series B preferred shares, if you plug in 33.3 million in our calculation for total equity, Series B preferred shares are valued at 10.3 million. We know the transaction amount was 6 million for Series B preferred shares. Based on our backsolve approach and using goal seek functionality at Excel, we estimate the total equity value at 17 million.